Now, if you're in from 60 or 65, that doesn't seem such a good bounce. But again, in percentage terms, that's a major, major move. Now, once we get there, unfortunately, I still see more downside. I still think that we will likely head down to probably about 12,000, which is my second price target on the downside. Absolutely. So amazing, right? I mean, we've seen such a collapse from the 65-ish thousand when we were doing that live interview in Dubai, which was just awesome. I still remember I was the loneliest man in the room. No one really wanted to talk to me too much there. I kind of had to stand in the corner because I was the only one that was bearish. But again, price is always king. Charts are always truth versus emotion. And I think we always have to remember that whether you're a bull or a bear, price and price charts are what's going to give you the clearest signal. So we saw the break of 20,000 just this past, really this past weekend. And the key here is to understand why it broke 20,000, because there were a lot of people saying, hey, 20,000 is the low, and by the way, they all came on once we got to like 30, they all piled on the bandwagon. But the bottom line is when you have everyone calling for a low of 20, you have a lot of people putting stops just under 20. And it's the tendency of a market to run those stops, make people freak out, make the weak hands exit, and then you finally get a short-term bottom. And what you could see here is that we had this collapse from about 40,000 down to about 26 or so, 25 and 26. That move down of 14,000, it's about $14,000, was replicated perfectly with a measured move down to about 17,500. So that's a measured move. That gives you a good basis for a low. In addition, if we take a look, we know that the January or the December 2017 high, that was a major level. We have now recaptured it after just piercing it briefly. So we know that support. And then even one more little tidbit of great technical analysis is that if you take the low from March of 2020, which is the low from COVID, which was the lowest point going back to quite a while on Bitcoin, it was around $4,000. And if you connect it to this recent low and you drag a parallel line up, you get the two highs from last April as well as November. I think as we get and stay above 20,000, a lot more people are going to start to say, hey, we have a major low in Bitcoin, and you're going to see the bulls come back with a vengeance, trying to say, okay, now we're going to start heading back up to all-time highs. I think that'll propel it over the next probably 3 to 6 weeks back to 25 to 30,000, which again, from 17,000 is a low, or 17.5, percentage-wise, that's massive. Now, if you're in from 60 or 65, that doesn't seem such a good bounce. But again, in percentage terms, that's a major, major move. Now, once we get there, unfortunately, I still see more downside. I still think that we will likely head down to probably about 12,000, which is my second price target on the downside. So I think it's important to recognize that I remain a long-term bull on Bitcoin. In fact, when we broke 20,000 at 19, I announced that I started my beginning hodl position. And so ever since we were at 65,000, even though I was bearish, I was always saying, hey, listen, long-term, I think there's a huge place in economy in the world for Bitcoin. And I think we'll get there. We'll get to 100,000, 500, maybe $1 million. It's just, you have to flush out all the weak nonsense. I think last time we talked about that Darwinian concept of only the strongest will survive. And you just have so much crap in the system, frankly, right? So the idea here is that in the near term, a bounce back to 25 or 30, the reason 25 is a key level is that is your low from the Terra Luna collapse. So that is going to be resistance. And then if you go up, there was a ton of consolidation for about a month that occurred just around 30,000, and that is going to be major resistance. So it's hard for me to imagine with the NASDAQ, even though I expect bounces there, I still think the NASDAQ's headed a lot lower, at least to the COVID highs, that the Bitcoin market would bottom just yet fully. So I still think we need to wash out more of the weak-handed Bitcoin, the cryptos, and that will finally give us later this year a big point bottom. So I do think there's a decent chance that we're back to 65 within 2 or 3 years. I think this next 6 months or so is going to be the hardest then we'll bottom out, and then you'll probably have another 6 months of sideways chop. If we look at past cycles on Bitcoin, it's usually that first year down, and then you get a sideways kind of choppy where the bulls and the bears are just battling it out for a period of time, and then finally you start to get that move up. And I'm still a believer that inflation is going to be a systemic problem, maybe not at 8 or 9%, but at 5%. And I still believe that when the economy really tumbles here, and I'm starting to see the signals of that eventually the Fed will say, okay, we have 5% or 4% inflation, but we have 10% unemployment. We now need to print again, which is going to be another positive for Bitcoin. So it may just take a little bit longer. I mean, everyone wanted that instant gratification when we were at 69. Everyone was calling for it by the end of November last year. The markets just don't work that way. When everyone's on one side, they're going to flush out everyone and try to get everyone to kind of give up. But eventually, the asset makes sense, right? We need it in the world we live in with the money printing, with the Federal Reserve and the central banks and just kind of the inflationary environment. So it is going to 100 and it is going beyond. You have to recognize that this is a different environment. Bitcoin has never been through a massive hiking environment with no stimulus coming into the system. So it could take longer, but past cycles have shown us it bottoms after 12 months. And with in the next 6 months, so 18 months out, it starts to chop. And then you get that next bullish run between 18 and 24 months. So the idea is, within 2 to 3 years, I think you're likely back a 2 or above the 65, 69,000 level. The next target is 12,000, but I think it's important to recognize that it's very possible we go below 10,000. All right. One thing I've learned in my trading career of stocks and commodities and now crypto is that assets go much further to the upside than anyone thinks and much further to the downside. I would say that you would prefer not to see the lows from 2018 and 19 taken out, which were around 3,500. Aside from that, this new unprecedented environment for crypto, because of the Fed and what they're doing, and they're pulling out money and sucking it out of the system, you have to expect that it could be a very rocky ride. So just to give you a sense of how I'm playing this, I started a hodl position at 19,000, just a small amount. I basically said to myself, what do I want to invest in Bitcoin over the longer term to just buy and hold? And I came up with a number and I divided it in 6 parts. And I took that first sixth amount of money and I bought at 19. And I'm going to basically put a buy level of that amount, 1/6 every 3,000 down. And so I'm looking at even potentially having some still buyable money even below 12,000, because I recognize from my history of trading that it can easily go below my lowest point. Honestly, I think when it comes to like Bitcoin, Russia doesn't really matter, Ukraine, all these things are secondary versus what the Federal Reserve is doing until we see Bitcoin kind of mature into more of a gold type asset. And again, it is going to do that. But remember, and I always say this now, is that Bitcoin is a 13-year-old, right? Started in 2009. Here we are in 2022. That's 13. You can't expect it to behave like gold, which is what everyone said ahead of time. Oh, it's a kind of a protection against the printing of money and all these things. 13-year-olds act erratically. It's a new asset. It's not mature like gold. Gold's been used for thousands and thousands and thousands of years. It will get there, but it's going to be a wild ride until it gets there. So I'm not 100% sure that. So I think that the key is going to be is right now alts are still in favor. People still have faith in them. I do decouple Ethereum from other altcoins and even stuff like Cardano and Polkadot. Basically, the top 20, I look at the ones that maybe they can survive this. Everything else, I would say they will decouple very, very soon if they already haven't, and they likely won't recover when Bitcoin bounces enough, right? So when Bitcoin really starts to become that safer asset that kind of is inflationary in terms of protecting against inflation, I do think that the top 20 may survive and may thrive, but I would definitely be very careful about anything else because, again, folks, you have to look at these as use case. When lots of money's in the system, people will pump money into these things. They're not even going to give a second thought. Once you get in a bear market, it's really what's valuable and what's not. And big money is what's going to drive crypto in the future. That is absolutely going to be it. And they're going to look for use case that has real use case. Ethereum has use case. Bitcoin has the digital gold. It's really the only one talked about like that. Some of these others have good basis as well for use case. A lot of them don't have that. So be very, very careful with most of the alts.